Hi, I'm Peter Rose, founder of Longwood Currency Trading. In the library today, I've got Jolt's report coming out, and I got a position on, so it's probably going to go crazy on me. So I thought I'd do it in here so I can check up on my position as time rolls through. Can Forex trading be simple? You've heard me in many of my videos. There's 560 of them. I hope you've taken advantage of subscribing to the channel and watching the videos, and thank you so much to so many of you who have taken the time to send me an email and chat with me a little bit about your trading experience and stuff. And in many of the videos, I've specifically stated that Forex trading is simple. And a lot of the folks that I talk to go, hey, I don't know what you're talking about. It's not so simple. It's the hardest thing that I've ever done. And I'm not successful at trading. And I've looked at all the stuff that's out there, and it all makes great sense. And then I try to replicate that, and it doesn't work. Well, let me explain what one of the major problems is. You're trying to do what somebody else is doing. I took a course, very expensive course, from a very well-known trader who's been on TV and all that stuff. And he laid out his, what I would term a system. In other words, he said, do this. When this happens, then, you go here. When it wasn't when the short MA crosses the long MA, but you get it. It's indicator-based, and it had, it works for him. I mean, when I was taking the course from him, he had 22 months of continuous profits in his account, never a losing month in 22 months. And that's fine. I mean, you can juggle the statistics and make $2 that month and squeak out and say you had a profitable month. This guy was legit, though, and what he was teaching was valid, and it was good. The elements of it were good, but I couldn't replicate it. And I lost money, and I wasn't trading a big account at the time. I was experimenting with a small account because I was trying to feel my way through. I had traded a couple of mini accounts before and had kind of wiped out on those, and so I figured I needed more education. So I was trading in demo, and then I had another mini account, and I was working through on that, and I just couldn't make this thing work. And of the systems that I've looked at, it made the most sense, and it was coming from a guy who is a renowned trader and made a lot of money and all that sort of stuff. So why couldn't I make it work? Am I stupid? I don't think so. Am I stubborn? I don't think you get a degree in physics or be successful in real estate investment and stuff that I've done being stubborn. You have to be open to the way other people view problem solution and work that through for yourself as to how you're going to implement it. And that's the problem with trying to replicate what somebody else is doing and teaching you, because they're trying to teach you to be them. I don't necessarily need to be, as a trader, nor do you, as successful as that guy was. I mean, if you're 22 years old, yeah, you want to be Richard Dennis or Simmons or whatever, and you think you're going to take your $500 and run that to $1 million or whatever, and maybe there's 2 or 3 people or whatever can do that. But you're not one of them, and neither am I. So in looking at simplicity of trading, I think the key element to that is understanding, well, what's reasonable? Because if you're trying to do something that you're not capable of doing, then you're doing stuff that you're not capable of understanding or implementing. And that makes it complex. I've read a lot about commodities, and I was interested in trading commodities for quite a while. Didn't have the money at the time to do anything like that. All my money was going into real estate. I spent 40 years in real estate. But in the, I enjoyed reading about life in the pits, okay? And a lot of the folks that were making $2 million a year and up, $10 million a year, came from the streets. They were just simple folks, cab drivers or whatever, and came in and traded commodities. Richard Dennis is an example with his turtle traders. They were just common folks. They were smart, but they were probably within a standard deviation of the mean of normal, okay? And many of them became wildly successful. Some of them failed, but some of them became wildly successful. So is it possible to be successful? Yes, it is. Well, then what's the magic sauce? What's the secret sauce that makes it simple? In Richard Dennis's case, and he's probably, he and his partner Eckhart are probably the poster kids for teaching normal people to be successful at trading. When he opened his turtle program, he took in 12 or 14, I forget how many people he brought in. But they got 2 weeks of training of stuff and nothing more. That was it. There's the desk. There's the plan. Do it. Well, the plan was no different than anybody else's plan would be. The turtle trading rules have been published for years and years and years. And if you go through them, you might not understand the math at the beginning as far as how you're calculating R and all that other kind of stuff, but you pick that up. It's a simple system. So why can't people who take that simple system use it to be successful? Because they can't. And Richard Dennis has said that. In fact, he swore everybody to secrecy about his system for years and years. And then one of the guys, decided he would capitalize on that and he would sell the system. And they asked Richard Dennis how he felt about that, and he goes, "It was not going to work anyway." He says, "I could have given that system away, and to hundreds of people, and they would not have been successful with it." So, how were they successful with it? Because they had training with you, Richard Dennis? And the answer to that is no, because they didn't get any training. I mean, 2 weeks of training, and you're trading live account right away with a couple $100,000. How does that work? How do you trust people with that amount of money? You trust them because you give them a framework. The rules that he gave was the stuff, but that wasn't really the framework. He taught them the framework, and he gave them the rules to implement within the framework. Peter, what's a framework? A framework consists of rules that are implemented in a process, and those rules are based on principles. So when Dennis would talk to them, he didn't talk to them about the stuff that he gave them, the written rules that are being sold and around. He talked to them about the underlying process, the thought process of how you think about the market and how you think about you and your interaction with that market. And he talked a lot about risk management. The rules were very easy about the risk management. You would hold a position until you had a 4R retracement. It sounds like, Jesus, some people don't even get 4R as profits. But his process was based on the principles of a long-term approach to trading. So the program lasted for 4 years. But Dennis never taught them after that. He guided them, he reminded them about the principles and the process. But without that, just the guidelines, I'll call them rules, but they're not really rules because they're system stuff. A rule, to me, is a principle-based series of conditions that when all of the conditions are true, then you take the trade, for example. You could say, but a system is that when the short MA crosses a long MA. But that's not a process, that's a system. The process is, maybe it's indicated by the short MA crossing the long MA, but that's not the trigger. That's a byproduct of what price action happens to be doing at that time. So if you're relying on the system, short MA cross long MA, you're going to fail. However, if you understand the system behind price action within the context of the market that you're trading, because that context is different in stocks and options and commodities and currencies and old tires and real estate and all the rest of the stuff. So if you don't understand the process of the battlefield that you're on, the conditions of the battlefield, then your rules are going to be incorrect. So the rules have to be based on the process, and the process is the process of the battlefield that you're on, the market that you're trading. It turns out, and this is from my study of physics and mathematics, that the most complex things are the easiest to solve. In martial arts, I've been in karate and teaching karate and self-defense I've been in it for 9 years at this point, and I taught actively for 50 years, hundreds and hundreds and hundreds of people. And one of the things that I learned from one of my students, who was a deep undercover narcotics detective with motorcycle gangs. This is 30 years ago. Was when you'd walk into you'd get a call, and, there's a big fight going on in such and such a dance hall or bar or something. And you'd walk in and everybody's throwing chairs and fighting and all this stuff. And the first thing you'd do is you'd scan the room. Because the guys throwing the chairs and fighting, they were inconsequential. They weren't the problem. You just lay the wood to them and everything is okay. But what you look at is the guy that's not moving. The guy that's back up against the wall, the far wall in the corner. He's got his arms crossed and he's just leaning back against the wall and he's drinking his beer. That's the guy that you need to be fearful of. It's very simple to identify him. And the reason he's the most feared is because he doesn't care. In the markets, you get this dichotomy in Oliver Stone's movies. First it was Platoon, death by bullets, and then Wall Street, death by finance, by money, and the emotional connections between those. We have these emotions, and the people who trade and the clients that are involved in these markets all have emotions. So the rules can't be when the short MA crosses the long MA, because that eliminates the emotional soup that we're all in. If you can eliminate that, then the identification of the danger becomes simple. And that's what you have to be alert to in your trading. You can't let a bad trade go. You've got to cut it short. So that if you can identify where there is danger, you either learn how to mitigate that danger or learn how to avoid it. And that's what my fast track course does. Let's identify the danger, and then let's build stuff to go around it to be successful. Most people think risk management has to deal with stops and all this kind of stuff. It doesn't have anything to do with stops. You can read all the books you want, and listen to my videos and stuff. It won't do you any good to understand that. You have to be in a situation like the turtle traders were with Richard Dennis. You have to be there to hear what he's saying, or what I'm saying, in order to understand the principles that the process is based on, and not the stuff, because the stuff is the tool. I want to plant a garden. I need a shovel. I need to know how to operate that shovel. Any dumbass can learn how to do that. But if you're trying to plant your garden in the winter, the when component, what do I got to know? I got to know how to use a shovel and plant seeds and all the rest of the shit. But what do I need to know? I need to know how to use a shovel. I need to know what a shovel is. First, what do I need to know? I need to know a shovel. How do I use that shovel? That's the second thing I need to know. Well, I use the shovel to dig the holes to put the seeds in. So I need to know how to implement that. But the most important thing is, when do I use it? So if all you're looking at is when the short MA crosses the long MA, all you're doing is looking at your shovel. You're missing the when component. And there is no system of trading that will tell you that. And when you have a rule, the rule has what's called a trigger condition. So if this condition is true, and this condition is true, and this condition is true, and this condition is true, that's the trigger condition. The last condition, you execute the rule. If any of the conditions are false, you don't execute the rule. It's simple. But what makes it simple is that the trigger condition is the when. And if you don't have that in your rule, then you don't understand the process that the rule is based on. So how can you build a good rule? Everything that I do in the fast track course, which is a 6-week program, doesn't take 6 weeks. We get done with it very quickly. And then that gives us the rest of the time to communicate with me, because I'm teaching it. I'm the mentor. I'm just not giving a PDF file to you or an online program with me videoing and all this stuff. I've got 560 videos out there, and I've taught everything that I teach in the fast track course. But it doesn't do you any good, because you can't ask me questions in real time. I can't respond to you as a 25-year-old and then respond to this guy over here who's 50 years old. I can respond to the average, to the mean. So you're 24 years old and I'm talking to the mean. Does that make any sense to you? No. All I can tell you is the what and the how, but I can't tell you the when, because that's dependent on so many different conditions and variables that you need to understand in order for you to write a simple rule. My entry analysis rule has 4 conditions. That's it. And they're simple. I can come up to the, oh, we went dark here. How are we doing? We're doing okay. I can come up to my chart here and look at that, and I can tell you right now, there's nothing for me to do right now. But there will be possibly in 10 minutes or 15 minutes, because that's oh, no, that's not true. In the next 40 minutes, that's a 4-hour chart. This is a 4-hour chart. How did I do that? Because the first thing you have to know is there anything I need to do right now? If not, then is there anything potential that could come up? I looked at that, 5 seconds. Yes, there is something that's potential that's coming up, so I'll monitor that. And maybe it'll happen within the time frame that I want to trade. The third is I look at this thing and I go, oh, you know what? I'm not going to get into anything during the day here. That price action just doesn't mean anything. I can shut it off. I can answer emails. I'm done. That's the first step. That's the process. And then you have a rule that has conditions when you have an opportunity that says, okay, I'm ready to do something now. Okay, I'm ready to do something now doesn't mean hit bid ask. It means I'm ready to do my analysis of that particular situation. And that analysis takes me 15 seconds. Because I only have 4 conditions. And I can go, bum, 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 bum. There's nothing to do right now. But I know that there's something that's going to happen. So I keep redoing the analysis. I keep reiterating over the analysis until all those 4 conditions are met. And then I go in. I don't need to wait for price to come to me. I don't need to do all that stuff because all that is system-based. I'm going to wait for price to come. I'm going to wait for it. No, that's not what you're doing. You may be waiting, but it isn't because you're waiting for price to come to you to confirm what you're doing. You're waiting for something else. I'm waiting for one of my conditions to satisfy itself. And it doesn't at that point. And so I'm waiting until that condition is satisfied so I can move on to the next condition. So I do my analysis in 15 seconds. Boom. Okay, I'm not quite there yet. I know I'm going to have something to do, but I'm not there yet. Because the rule is something that ends with a bid ask. I'm not ready to hit bid ask. But when I am, that price action will satisfy those 4 conditions and I'll be in. Now, I'm basing that on the entry analysis phase of what I call the life cycle of a currency position, which is a simple rip against the more complicated software development life cycle, SDLC, that I used for 33 years as a senior software engineer, building enterprise level business applications, very complex business applications. The software development life cycle, the rip that I took on that is the life cycle of a currency position. Entry analysis, position management, exit methodology. My entry analysis is the most important because if I don't have an entry, I don't have a position to manage and I don't have a position to get out of. So entry analysis and then position management and then exit methodology. And you have to clearly understand what the boundary condition is between doing entry analysis. And entry analysis doesn't stop. Oh, my condition is true. I hit bid ask. That's not the end of the entry analysis. There's a specific condition that has to be met before you can say, okay, I've transitioned into the position management phase of the life cycle of a currency position, as well as what is the boundary condition that I need to hit in order to exit. What are my exit conditions? And there are variations on the type of conditions that we're going to be looked at. They have to do with, am I in a trend? Am I in a chop? Am I in a range-bound motion? Is it Tuesday? Whatever that is, to create an exit condition. And so, can Forex trading be simple? Yes, it can be simple, but there's a lot of complexity that has to be gone through first. Are you going to be able to do that by reading a book? Who the fuck are you going to talk to ask a question when you don't understand what's going on in the book or you need something filled in? What are you going to do, write the person an email? You need to know that answer right then. And so that's the service I provide in my fast track course because that's the way that I do it. I got a degree in physics, almost a minor in math. I understand what the educational process is all about. You need a teacher. The teacher can't just give you the algebra book and then give you a test at the end of the year or the end of the semester and you pass the test. You've got the book, you've got all the information that he's going to teach you, but you still couldn't pass the test. Why? Because you didn't have the teacher to help you. If you're interested in any of this stuff or pursuing it anymore with me, send me an email. I'm not trying to sell you a class. I will try to help you the best I can because I can't take a lot of people in the class, the fast track program, because it's just me and I got other things I want to do than try to convince people that they should take my class and then I got to keep convincing them that it's a wonderful thing. You know, there's a glass of water on the table. I can sell it to you if you're thirsty and you need it. Other than that, it's just a glass of water on the table. I don't need the course. I wrote it. So call me and we can talk about it. If you have a specific problem, maybe I can help solve that for you. And then you'll be all set. But if it's more than that, if it's a process, I'll explain to you why you're having the problems that you're having. And I can show you the methodology, the general methodology of how you can get out of that and unscramble all that stuff and put some order into it. Now, if you're an experienced trader, maybe you'd be able to put that advice together and make it work for you. If not, then we could talk about the course. But until you say, I want to talk about the course, I'm not going to bring it up. I'm going to talk about the methodology that the course presents, because that's how you should learn this stuff. But that's not a sales pitch. You can believe that or not. But Forex trading is simple as long as you understand how to put the information together, the relevant information out of all the information that's available, how to put that information together in sequential order so that it's easy to step through a series of conditions or principles or whatever in order to achieve the goal that you want to achieve. And it's all based on you as a person. If you're 24 years old, I'm going to be working with you differently than I would if you were 54 years old. But you won't know that unless you send me an email so we can talk about it. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.